Hey, good morning, everybody, and happy Friday. How are you? April 4th, slightly ahead of the market opening while I'm recording this video. Let's talk about it, yeah. The news yesterday, shortly after the closing bell, Ryan Cohen did buy the GameStop dip on Thursday. In fact, he purchased 500,000 shares at a price of $21.55 per his new SEC filing. Those were purchased in the open market with his own cash. So that puts his holdings now at 37,347,842 shares, which is approximately 8.4% ownership based on 447,083,981 shares as of March 19th. So his aggregate purchase price, though, if you note, of the shares, 106,851,000, excluding brokerage commissions. Nice entry, Mr. Cohen. He had previously had 36,847 as of January 27th, because if you remember, we had posted about he switched the shares out of RC Ventures LLC and put them into his personal name. Also to note in that filing, and we'll look at it, 22,340,000 shares are owned by him, but they're in a margin account with Schwab, where basically he can get margin credits. So typically, when you see a big stockholder, Elon Musk and others, when they have large stock holdings, you can get loans, borrow money against that. In this situation, he basically just has margin, where they can extend him credit in that regard based on, having those shares on the books. So this was the filing that came in yesterday, and I'll always link those on the SEC website. It was the 37,347,842 shares total, representing 8.4% ownership. And this is where some of that other information comes down in the footnotes on that filing, where it talks about, his aggregate purchase cost, shares outstanding. And on April 3rd, the reporting person purchased 500,000 shares at a price of $21.55 per share in the open market. Insiders will sell for a lot of different reasons. They usually only buy for one. They think the price they're buying at, the stock will go higher. Being that he's got a pretty low cost basis, it didn't really damage his cost basis adding 500,000 shares, but it does offer something to investors. It says, hey, I think the stock's worth $21.55 and I'll buy it here. But spent $10 million and bought some shares. So for a CEO that doesn't take a salary, chairman of the board, hey, you can take from that what you want. My personal opinion, buying 500,000 shares at 21.55 probably didn't, like I said, didn't hurt his average too much. He added to the pot, increased his ownership a little bit, and it sends a message out there to other GameStop investors. Hey, I'm buying. So, hey, you can take that for what it's worth. I think it's a positive sign in that regard. Something else I wanted to talk about before we jump in over to some charts here. I saw yesterday, I think it was 3.2 trillions the total wiped out of the market yesterday. And I don't know if anyone saw SPY, because I did see GameStop dip this morning along with SPY this morning. I think the low on SPY when I looked was, because I saw a couple points down early this morning. I thought, really, it's only 6:30 New York time, and low on SPY of 515.95. I just said thanks for the one like, 238. But something I wanted to share here, this Peter Lynch video that Bar Chart had posted. But you should study history. Oh, let me see here. Oops, I want to make sure I didn't mess that up here. I think that's playing for you. If it's not, we'll see here.
The market's had 50 declines of 10% or more. So 50 declines in 93 years. But once every 2 years, the market falls.
Yeah, I'm not sure if you were hearing that, but go to that video. I think it was a powerful piece from Peter Lynch. The market will go down. Sometimes it's a good thing when it does, but if you're not ready for that, you shouldn't own stocks. And what he's talking about is basically every 6 years, the market, may drop 10%. Sometimes it'd drop 25 points. And he spread that information out over a very long timeline. So what he's trying to say is, cash is king. Ryan Cohen had posted about, Warren Buffett holding cash, and now we know why last year. For example, my son texted me this morning, hey, Dad, I was kind of glad, I unloaded some of my portfolio late into last year at your advice, because he, sold some shares and stocks while the market was good and better prices, obviously, than right now. I mean, he used the proceeds and paid off his personal loan on his or paid off his vehicle loan. So, now he's got his vehicle paid for. He's got his work vehicle that he owns and paid for. So two titled vehicles took an opportunity there in the market, and here's an opportunity too, where some of the stocks this morning dropped to pretty good prices and cash on the sidelines may put you in a position ready to deploy. So let's take a look at that GameStop flow. We'll transition a little bit over here yesterday. About 31 million in total premium. Net call premium kind of slipped pretty much most of the day. A little pop in the net put premium towards the close. Net put premium at 1 million and net call premium though down 3.5 mil. So that's why net premium for the day was negative 4.7 mil. So we'll take a look at it here. Here were your highest volume contracts. Feel free to pause, screenshot, do what you need to retain that data. Those are your highest volume contracts. Again, like we've seen, it's been all short dated for this week. Was your highest volume. See the 23.5 for next week. I did see a pretty large order come through yesterday, about a couple 100,000 in premium. So we look at that volume yesterday, 5,300, about 3,800 appeared new open interest today. If you look, 48.21 on that transaction. Let's see, candle volume 4,500, about 3,700 appeared in new open interest. So somebody might have been selling some 23.5 calls for next week in that regard, is what that looks like. Let's take a look at the actual fill here. Try to determine exactly what's happening, because I know that was part of a flow alert on unusual whales yesterday, as denoted there. 4,500. Let's see, that was the total volume, and this size was 500. Trying to look at the price here, filled all on the low side towards the bid. More than likely sold to open. This particular trader may feel that GameStop will not close above 23.50 by next week, because these are about 9% out of the money, but it is a multi-leg. See the 76%. So let's take a look at that. And what that means is this more than likely is part of another trade. So let's actually drill into that, because it's important. We can't take that like, hey, they sold to open all those calls. Not necessarily. Here we go. Here's the other side. So if we look on unusual whales, if you don't have it, this is kind of like an informative of just some of the amazingness within the product. But for example here, so at 9:26 yesterday morning, so 10:26 New York time, we see size 39.89, and you see sold. Okay, you're thinking sold at the bid, sold to open. That trader doesn't think it's going above. But if we note here, oh, it's a multi-leg. And see, you wouldn't notice that. You wouldn't see that with other. For example, if you're looking at Webull, you would just see, hey, look at that volume, or Robinhood, look at that volume. You don't know that it was connected to another trade. So with unusual whales, we can break that down and take a look at that data, and we can actually take a look here and determine there's actually a little bit of a strategy going on. So you can see here, we sold the 23.5 calls for next week and sold $19 puts for this week, and then bought 23.5 calls for this week, sold and bought $18 puts for this week. So definitely a strategy. You can tell there by the size. So they receive on these side, they receive credit for this and paid money for that. So it's a net credit in that regard, in that they received about 152K in premium selling these two, and then spent 68K purchasing these two, all in one transaction there, denoted by the time. So these are, like I said, multi-leg. You can see exactly what they're doing in that regard. And the idea there more or less is spread for the week. Let's see, the 19 puts, they don't think will go below. They don't think it'll go above 23.5. They bought 23.5 short dated, and then it does. And then $18 puts next week. So it's a spread based on the trade. So we could actually, let's see here, if we can pull that up and visualize the profit loss here on this. Let's see, what's really cool, because in unusual whales, you can really drop into this and then do your options profit calculator and really take a look at it. So put credit spread, kind of what they ran in that regard. Let's take a look here. Profit and loss. So we can kind of give you the idea how that'll play out in that regard. See, I know the numbers aren't right there. Net credit, max loss, because it's the numbers aren't accurate because the market's not open at the time. I don't want to spend the time right now in this video and bore you and running through, but let me check these prices because I think the price is a little bit different there. Let's take a look here. So you can give you the idea here in that regard. So if you look down here, here's your stock price. Here's your profit loss based on price. So biggest opportunity to profit within this range here, 1750 to 2119. Trader keeps the bulk of their money and profits. As price moved up or price moved down, no. So yeah, put credit spread. Alternative to the short put, which involves selling a put at one strike and buying a put at a lower strike. Same expiration. Similar to a short put, neutral to bullish bet that profits through time decay as well as the underlying asset going up. So they may feel the asset will go up. And that's just based on what is determined there from this. I'll actually plug this in, maybe remind me in case I forget. I want to plug this back in to the profit loss calculator when the market opens to get accurate pricing. And then we can kind of take a look and see how that trade plays out. So again, always important to go back and look. If you don't have unusual whales, you wouldn't have known that. You would just saw, oh, look at the volume. There's always another story in that regard. And we got denoted that with that 76% multi. And sometimes when I filter the flow, I'll filter out multi-legs so I can look at just single leg in case we're trying to find something directional. But it's always important to look at everything. So you can see the other calls here for this week and the volume as well. Let's see, 25s for next week. I saw those coming through as well. And I believe that was short. Oh, we're open now. So now my data is getting skewed because we just opened. I did this last recording. I was trying to look at it. So you had 4,800 volume, but a decline in the open interest. So I'll let you screenshot that there. And we'll take a look here where the actual highest money was spent in that regard on GameStop yesterday. We'll sort that for you. That way you can get your screenshot and pause it for the video. Let's see, GameStop, $85 puts, 10 million on premium there, the 85. Let's see here what they did yesterday. 1,500 volume, 600 peer open interest, again at the mid. Part of this arbitrage, possibly, because that's a deep in the money put. The stock's trading currently at, what, 21.44 this morning, up 1.5 points. See how good some premium was in there. 10 million premium there. On the deep in the money puts with some time. Let's see, $20 puts for January. Saw some money yesterday as well, about $1 million. 1,900, and then the open interest, though, did decrease. Let's see, they were bought yesterday. Trader might have left some of those. Let's see if we can zoom out here on the timeline. Yeah, we can see some selling here. Maybe bought back here. I'm not going to spend a whole lot of time on it. It does have time on it, but it's an out of the money put. So here's your premium here. The ones over 500,000 or higher is the 18 calls for January, 30 calls for June, 30 for January, 19.5 for May. Let's take a look at that. Was that part of that strategy? Oh, let's look yesterday here. 19.5 yesterday. Oh, it was a new option chain. You see that volume on the new option. Let's see. 19.5 calls for May 23rd. Trader might have sold these. Let's see. Filled at 323. So let's see. 1950 and 323. What was that? 2270. 2270. The stock's trading below that. So if those were sold to open and they wanted to lose their shares at 1950, they'd lose them at 1950 plus 323 for the premium received. So, but it is something new that just opened. So we'll continue to follow that 19.5 call for May. We'll see what that does. But there are your calls there. I don't want to take up too much of your time. I know some of the videos get long. I know they're long-winded. But let's take a look at the net flow here this morning. Now that we have opened, actually, during the live recording. So we can see what's happening here this morning. I just want to take a look at the premium. I know it's just the first couple of minutes. I want to look at price here. Let's see what's happening. Volume, 22 calls for this week. 22.5s for next week. 21.50s for this week so far. Let's take a look over at that chart. What are we doing this morning? 21.31. So the same price levels we saw back in October. Those dips in October, some of those lows at 20.30. You saw that dip this morning in pre-market. Let's turn on extended hours so we can see that dip this morning. 20.52 was that low this morning. So you've seen that before. Back in October. Pre-election rally. With some volume picking up, though, after the notes and earnings. And then the last few days here picked up. So we'll take a look at it. We'll see how it plays out here. Take a look at your moving averages up there in the top left corner. For today, this is on the daily chart. Well below all the EMAs. And now the 50 SMA is crossing the 200 right here. When the short dated SMA crosses the long dated, it's kind of short-term bearish, to mid-term bearish. So we're going to watch to see how this plays out. Price action volume and option flow always dictates it. See that short volume, I think, is slowed down a little bit. Let's pull that up here. Yeah, short volume tapered off since the convertible note arbitrage. Everybody was like, hey, it's falling down each day. So we'll take a look at what the short interest reports. But you've seen the option flow. You've seen the options being bought and sold, closed and opened in that regard relating to the arbitrage. So we'll see. We'll see how this plays out today. 21.28 currently for GameStop. Net premium negative. So let's see. Calls, a little bit of calls leaving the table. 22s for this week. Definitely being sold this morning. Let's look at it here. Yeah, selling and buying. So hitting them at 18 and then already down 15. So they're leaving. Some are leaving. Some are buying and some are leaving. Short dated. Let's see the 22.5s for next week. Let's see, they were around 80 is the high yesterday, only a high of 60 today. A little bit of bid side volume as the traders are exiting more than likely. Some of those either, sold, bought to open, or pardon me, some are being bought to open, some being sold to open, some being bought to close. A couple bid sides in the last couple days. So, yeah, we'll just see how it plays out. I mean, when you look, let's see what SPY is actually trading at this morning so we can take a look here. Like I said, it's yesterday I think was the worst sell-off day since the March COVID dip. So that was back in 2020. Access SPY pre-market this morning low 515.95, which is wild. When everybody's like, it's 610, it's going to 700. Some price has memory. At 521, I gotta adjust my chart here. It's down so low. Let's take a look here. 521. We saw this before. Remember August? I know everybody remembers August. That drawdown. That was what was that? Pretty decent day there. Nice plunge though in August. But we're right there. Kind of wiped out all of that work since August. All of that. Some people got hurt. Some value came down, but now, do we reset from here? Daily RSI down there too. 2680. Yeah, maybe it's a reset. Maybe we go lower. Price has memory. So the low, August 5th, 510. This morning, 15.95. Not too far off from that August low. So definitely something to keep in mind. Stocks don't always go up. They go down. Exactly. Peter Lynch video. But if you look on the weekly, that's wild. Lost the EMAs there. And the 50 SMA on the weekly. I mean, the bounce last time, October 22, down there on the 200. And then October 23, down there. I'm not sure. Anything less, that's wild. That'd be 465. I'm not saying that. That's where we're at. So let's look at the monthly here. Where's that COVID low? Right there. That was 13.698% for the March candle. 6.5% on the April candle. Followed by 6.2% on the March candle. Ooh. Yeah, we'll see. Just follow it. But, I mean, if you think long term, these things happen. So, depending on your timeline, you could just breathe and be patient. Zoom out. I know in the short term it doesn't look good. But if you're in the S&P at $70 back in 2009, Even at 521, you're still golden. So it just depends what you're into, short dated, long term. Yeah, it really all depends. I had somebody ask me, "Hey, what are three good stocks right now?" And it was an interesting question because one of the ones that my son and I have been on. Do you remember back when AT&T and all that news was coming out with the Wall Street Journal about all this lead and the stock had sold off and it went just under $15. Let's see when that was. Yeah, 23. Wow, I didn't realize we're back in 23. So my son and I had been loading common shares under 15, collecting a dividend, and loading leaps, $15 leaps in the money now, which are deep in the money. And then we started, let's see, it was December or January this year. We started loading 27 and $30 calls for January 27. So we were loading those around here. 27s are in the money, and 30s they're still out of the money, but they expire. Like I said, they're leaps. So they are January. Let me look at those actually this morning here, because he said, "Oh, Dad, that's one of the things saving my portfolio." Yeah, the 27 calls for January, the January 27 expiry, they're still up 162%. The $30 calls are still up 200%, and the $15 calls, these were January of 26 though. They're still up as well. 1378 a call. So from the 285 entry, so not too bad. But yeah, AT&T has been a performer. Today is a little drawdown as it saw 29 yesterday, but it's been one of my greatest picks with my son and I that we've been building on, collecting dividend, making income, and yeah, premium. I know my son took a few off the table, even though he had some time left. There's never wrong with taking some gains. We can always reposition him for a later date, but yeah, T's been strong, and he wanted to add commons again down here, and then he was like, "Why didn't I do it? Why didn't I do it?" I know. So yeah, AT&T's been a great performer in regards, to that. So it's been happy. A continued dividend. They still got plenty of cash in that regard for the dividend. Their outlook looked well. So yeah, I mean, the analysts I think had price targets 30 and 32. Stock's been there before. So I told my son, stocks have memory. It's just not a matter of when. It was not if. It was a matter of when. So, but yeah, when it started moving up 24, 25, even 20, from 15 to 20 was a good move, like I said, for us. So we were in the stock down here. Stock's up here. So it's a long term. I actually met my son's mother at AT&T when I worked there in the 90s. So yeah, believe it or not, been a customer of them since the 90s. So it's kind of a win-win. You believe in stocks you own. You believe in the company. We got such a long history. Even my mother worked at AT&T. So yeah, that's just my little side note for today. I know I got a little off topic, but it was just to answer that. So yeah, that's what I got for you today. If you made it all the way through the video, you're awesome. Next week's my birthday. I'm looking forward to ordering the Nintendo Switch 2 pre-order. Just my birthday present for myself. Nothing too crazy. My son's is also in April, and we're looking to go watch The Accountant 2 together on IMAX. So it comes out on his birthday. Very excited for that. One of my favorite movies is The Accountant. So excited to see that. We'll definitely be at AMC. I'll post the obligatory, photo with the popcorn, the drink. It's what it's all about. It's not so much seeing the movie in theater is the experience I'll have with my son and the forever memory I'll get of being in the theater watching Accountant 2. And honestly, lifetime memories like that, I don't care what the price of popcorn or the price of admission is. If you want AMC stock to move up, you got to go to the theater. You got to buy popcorn. You got to buy soda. Buying and holding the stock simply isn't enough. They need attendance and they need revenue. And you have to go to the movies. And I don't have any problem going to the movie because I'm going to gain a memory from that my son and I can talk about. We've seen tons of movies in theaters together, and we still reference the memory. It's a part of our life, and it won't change. So if you made it through today's video, you're totally awesome for that. Why don't you reply to this video, Nintendo Switch 2 pre-order, and I'll know you watched it all the way through. You're all awesome. Enjoy your Friday. Happy trading. Have a good weekend. And if we can get a like on the video, I'll drop another one Monday. Have a great